You finally get that raise at work. And on the way home, you drop $500 on a designer watch or a new pair of shoes. It feels like a milestone. You've earned the right to signal to the world that you're moving up. But the data tells a different story. This massive 60% block of Americans making a six-figure income are still living paycheck to paycheck. We spend because we're hardwired to project success to the strangers we pass on the street. Using the paycheck to purchase status symbols creates a surface-level display of success, while your actual financial stability erodes underneath. This behavior is driven by what author Morgan Housel calls the man-in-the-car paradox. When you see someone driving a $100,000 sports car, you rarely admire the driver. You project yourself behind the wheel, imagining people admiring you. The driver thinks they're buying respect, but they trade actual financial security for imaginary admiration. Most people are too busy thinking about their own image to notice yours. To stop going broke while trying to look rich, you have to look at the math hiding behind every price tag. The first invisible cost of that $500 impulse buy is the W-2 tax drag. As an employee, you earn your income in pre-tax dollars, but you buy consumer goods using after-tax dollars. This shows the real cost of a luxury item. To spend $500 at the register, you actually had to earn $684. That missing $184 represents the hours of labor and life energy traded away to reach the sticker price. The price of the tag is lower than the actual cost. Every luxury item requires more labor and more time than you see at the register. Then there is the second hidden layer, opportunity cost. Every dollar spent on a status symbol is a dollar taken from your future self. This curve shows what happens to that same $500 if it's invested for 30 years. It grows into tens of thousands of dollars in compounded future wealth. To stop this wealth destruction, you need a defensive filter for your spending. It's called the double buy rule. The rule is this: if you cannot buy a non-essential luxury item twice over in cash without draining your stability fund, you cannot afford it. This rule forces your brain to stop and account for the tax drag and the opportunity cost that emotional impulses usually ignore. Financial freedom starts when you accept a simple truth. Spending money to show people how much money you have is the fastest way to have less of it. Real wealth consists of the financial assets that stay in the bank, rather than being converted into visible goods. It is the unbought upgrade, the watch you didn't buy, and the quietly compounding investments that grow silently over time. Men like Cornelius Vanderbilt focused entirely on the steady accumulation of foundational assets that produced capital. True wealth is silent and invisible. Because it stays in investments rather than your driveway, it isn't subject to the pressures of social status. Stop trading your limited life energy to impress strangers who are not paying attention to you. Using the double buy rule gives you a daily mechanism to stop impulse buying at the source. Ignore the urge to display status. By following the math of your actual earnings, you finally build the kind of financial security that stays out of sight and entirely under your control.